the IEA 21st webinar on key insight on budget implementation. That is on trying to look at budget reality promises versus the realities for the financial year 2024-2025. And for the purpose of those who are attending this meeting for the very first time, the Institute of Economic Affairs is a think tank. And what we do is that we provide a platform for informed discussion in order to influence public policy in Kenya. And how we do this is that we normally undertake research and conduct public education on key economic and topical issues in Kenya. And we use the outcome of this research and public education or we utilize the outcome of this research that we do actually to influence public policy in Kenya. And to be able to do this work, we normally have these six program areas. And one of them is the Popular Economics program. The second one is Strategic Insight. The third one is International Trade and Development. The fourth one is Economic Regulations and Competition Policy. And the fifth one is Constitutional Rule and Economy. And the one which is hosting this particular webinar is the Public Finance Management Program, overall supported by the PR and Communication Department. And just for a start, the reason why we are having this conversation today is touching on the question of the budget implementation. We know very well that where the budget cycle will start in a couple of few weeks. That is the budget for the planning for the budget for the financial year 2026-2027. But again, we know that we had approved the estimates of expenditure for 2025-2026. And again, we know very well that we have been implementing the budget for the financial year 2024-2025. And the question we are asking today is how credible was the budget for the 2024-2025? And we know when you're talking about the budget credibility, we want to look at issues to do with did actually the government stick to its financial commitments when it comes to policy areas that it promised. And that's the reason why we are having this conversation today, just to check about the promises that we made in the budget 2024. We compare with some of the realities that we have. And to do this, and I don't want to preempt my colleague Noah, who will be making the presentation, we'll be having a number of key points, the key talking points. One of them, we'll be talking about the macroeconomic indicators. We'll be talking about looking at our revenues and expenditure, the planned revenues and expenditure vis-a-vis what was actually realized, and then talk about some of the implications that what does it mean. And the reason why we have done this particular analysis, just we have done it up to based on the analysis of the control budget report, which is up to the third quarter, because the annual report will be out at the end of this month, or toward the first week of the month of August. Thereof, that's when we expect to have the final figures from the control budget. But also we have gotten some figures from the quarterly economic budget review report from the National Treasury. So without digging too much into what we have been able to prepare, I think we need to have some set of rules. Number one is that our colleague in the program, Noah Amarwa, will be able to run the presentation throughout. And what we can do as Noah is doing the presentation, I think we can use the floating bar where you use the chat box. You can be able to raise a comment, a concern, or even a question, which you will be able to address during the plenary session. So I would like to take this moment to invite Noah, so that you can be able to run the presentation. And Noah, you have a maximum of 35 minutes, so that we can have a Q&A where we answer any issue that will be arising from the presentation. Karibu sana Noah.
Yeah, thank you. Let me highlight the outline of my presentation. So we'll begin with the introduction, where we'll define what actually we mean by budget credibility. Then we'll look at the macroeconomic assumptions underpinning the budget. Then we'll look at we'll now get into the analysis, the findings. That is the budget credibility, looking at the promises versus the actual outcomes, both on the revenue side and the expenditure side. And then lastly, we'll see how this affects the budget service delivery. Yeah. So in terms of introduction, budget credibility. So here, what we mean is okay. The reason why we are yes, the reason why this is important is because initially during the budget making process, we have budget participation throughout. The budget begins around 1st of September. That's when the BROP, the budget review and outlook paper, is out. And by that time, we already have the circular, which informs different departments to start preparing the new budget for the new coming year. Then we have the sector working groups, and then we have the budget policy statement around February, and we have all this. So this process is well elaborate at the beginning. But then what we find out is that in the course of the implementation, we have changes to the budget. Yeah. So then these changes, we can move to the next slide. These changes, we are saying, we want to evaluate how they affect the budget, and we know they affect the budget. So it reduces or it undermines the legitimacy and even the effectiveness of the initial budget, yeah, which has been shaped through public consultations and even now after approval, yes, and even the parliamentary approval. So if you mutilate the budget too much, you'll find that the proposals from the members of public, which are input into the budget, will be diluted. Yeah. And then we are saying it will then affect the budget implementation. So yes, next slide. So in terms of macroeconomic assumptions, so we know that the budget usually is informed by the macroeconomic assumptions. And the key macroeconomic assumption is actually the economic growth. And now, to give an example, in 2024, most of these economic growth rates are usually provided by the Kenya National Bureau of Statistics, and they provide on annual basis. So in 2024, according to budget policy statement, the projection for economic growth, that is how the GDP will grow, was 5.5. Yes, 5.5. So BPS, that means February that year, 2024. And remember, the budget is coming in April, and then it will be approved in June. So during those discussions around April and even into June, people will be discussing the budget based on the projection of 5.5, according to the BPS. But then down the line, in the course of the implementation of the budget, you'll find that the actual growth rate was actually 4.7. Yeah. So the economic growth, that assumption of 5.5 informs the discussions around, for example, revenue, how revenue will grow, because it's assumed that the revenue performance is in line with the economic performance, because after all, the taxes, ordinary taxes, will come from the performance of the businesses. Yeah, if you close down the business, you'll not be able to get enough revenue to pay the government. Then over to 2025, this year. So in February this year, we were working with a projection of 5.3 economic growth rate. However, there are signs, and looking at various projections across, you'll find that the way things have gone, that assumption of 5.3 was, we can say, overly optimistic. So, for instance, according to IMF, the growth rate is projected to be 4.8% this year, and not 5.3. Yeah. So lower than expected GDP growth is likely to lead to lower tax revenues, which will in turn adversely affect budget implementation. So because we have lower taxes and now we have higher expenditure, and so the difference will mean we have a huge difference, that is the budget deficit. Yeah. So we want now to trace these budgets to see. This is from theoretical perspective, but then we want to see empirically what has been happening. Let's go to the next slide. Yes. So as I've already mentioned, for 2024, the financial year that just ended June, 30th June last month. So in that year, we have had 3 supplementary budgets. Yeah. So the first one happened in August last year. The second one happened in March. The last one, third one, happened in June. Those are 3. Now, on average, when you look at down the line, it has been around 3 or 2. No year have we had just 2 for the last 5 years. We've been having 2 or 3, and in most cases, actually 3. So now the question is, if we have, now the question will be, isn't 3 too much? Because we have department projections, and they're well, we can skillful in terms of doing the projections. So how come we are having so many on the budget? Yeah, and then we'll see how this is affecting the implementation. Yes. So in terms of evolution of the overall budget in 2024, 2025, so this slide presents the original budget, that is the approved, what's otherwise called printed estimates. So printed here means this has gone through the whole cycle of formulation. So we can refer to them as original budget. And we are looking at both sides, both the expenditure and the revenue side. Now, the third column, that is supplementary budget 1, is the initial revision on this budget, original budget. And then supplementary 2 is now the second that happened in March. The first one happened in August, the second happened in March. And the last column, we are trying to see the percentage difference between the original, that's printed estimate, and the supplementary 2. Supplementary 2, yeah. So the reason why we've not included supplementary 3 is it was released a bit late, and we are not able to get all the expenditure items and the revenue items. But the message is actually the same, even when we could have supplementary 3. So in terms of expenditure, there are some patterns that we see, clear patterns that we see, for example, that there is a tendency to maintain a high expenditure. Yeah, so you can see expenditure increased marginally to 0.4 by 0.4%. That is 3.99 to 4.008 trillion. Yeah. Now, for revenue, we see that it decreased. It decreased from 3.3 to 3.0. Now, the question now will be, why is revenue decreasing too much? Does it then show that the initial revenue estimate 3.3 was too high? Yeah. Then budget deficit, we can see the implication. We see that the second column, you can see the budget deficit is 649 billion. Now, when you come to supplementary 2, we see that the deficit is 940 billion. So an increase of 44.8%. So the issue now here is, while we see revenue are estimated to be to decrease too much, and yet we see expenditure being maintained at high level, then that increases the budget deficit. So it will mean that this deficit has to be sourced or has to be financed through the domestic and external sources. Yeah. Next slide. So from the overall, let's try to dissect now between the expenditure and the revenue side, and we begin with the expenditure. So for expenditure, we can see when you dissect between recurrent and development, we see that it is actually development that is taking the that is being affected most in this case. We see that the printed estimate or original estimate is 2.8 trillion, and then it has increased to 2.9 trillion, an increase of 3.7%. But for development, as at March, that is supplementary 2, development decreased from 702 billion to 614 billion, a decrease of 12.5%. Yeah. So we can say in this case that development is disproportionately affected in the course of these budget revisions. Yeah. Next. So we go to revenue. As we've already said, overall, by 8.2%. Now, when you dissect this total revenue into ordinary, then we look at two income and VAT. The decrease was 11 is revenue from the ordinary tax. Things like the income corporation. So we see overall it has decreased by 11%. That's a huge decrease. We that ordinary taxes. So we can tell that that some of the tax measures that were implemented have actually not really led to revenue. The reason why we have these revisions is they anticipate that they will not meet that target. That's why they're decreasing. So VAT, in as much as for example, petroleum VAT on petroleum petroleum levy, that VAT, VAT on petroleum products, that VAT, in as much as it increased, you find that the total revenue collected from VAT actually is lower than what was anticipated. Yeah. Next. Now, we want to dissect the implication to see how it's affecting the budget performance across the sectors. So we have 10 sectors. The first is, as listed here, we have education, energy infrastructure and ICT, the public administration. We have GJ laws, that is governance, judiciary, law and yeah. So then we have national security, health, environmental protection, water, natural resources, then agriculture, rural, urban development. Then we have social protection and recreation sector. Then we have that is general economic affair and commercial affairs. So when you dissect across these sectors, you find that the red ones, this is as at March 31st this year. So that is 9 months into the implementation of the budget. Yeah, and you find we are trying to compare between what was approved, that is the blue bar, vis-a-vis the actual as at that point in time. And so you'll expect roughly about 75% if you go linearly projections. So we note that some of the sectors that are have performed poorly in terms of absorption is actually we have health, we have environment, water and natural resources, ROD, that's agriculture. Yeah. So absorption rate is important because it's telling us the extent to which you have implemented the budget. So it takes the ratio is actually the actual budget, that's the value in the red bar for the red bar, divided by the budget estimate, that is the value in the blue for the blue bars. So for example, health is 56%. Yeah. So let me talk about health and actually energy, infrastructure, and ICT. So which is 46%. Yeah. So for example, for energy, while they had anticipated to spend around 437 billion, as at that first March this year, they had spent 202. Yeah, and you expect to be about 75% of 438. Yeah, which should be in the range of above 300. You expect by that first March they should have spent around that 350, above 350 billion, but they only spent. They had just spent 202 billion. That's for ICT. Yeah. Then for health, they had anticipated to spend 136 billion, but as at 31st March, they had spent 75 billion. So the absorption rate is 56 billion. So you can say they ordinarily they should have spent above 90 or more than 100 billion by that time. Yeah, if the budget was credible enough, looking at the projections of revenue and looking at the projections of the spending. Next. Another thing is about disbursement of funds or revenue to the departments or to the sectors. So in the event of delay in the collection of revenue, what normally happens is that we have rationing of the disbursement of funds or revenues to the departments. So this chart, we try to look at it across the 10 sectors, looking at the extent to which the revenues were disbursed vis-a-vis yes, how they had anticipated those revenues. So you'll find, just as we had mentioned, the energy infrastructure and the ICT is coming last, 45, while the absorption rate, as you can remember, was 46. Health also is very low, 55%. So here you also expect around 75% will have been disbursed that time. So this shortfall, I will say, points to poor planning of when revenues are anticipated to be received and the corresponding expenditure or budgets. Yeah. Next. So of course, then we expect that the services, public services being offered, will be hit by those shortfalls. And here we provide a case study. We are providing 2 case studies. One is on the health and 2 is on the infrastructure, specifically the public works. So for medical services, still as at March, 31st March this year, we find that medical services was heavily affected. When you look at medical services, the State Department for Medical Services, when you look at the last column, the first row, you'll find that it is 48. That is the expenditure to revised gross estimate. That is absorption rate. So that is the extent to which you had spent what you had proposed. So as at this point in time, what had been spent was 48% of what had been anticipated. So they spent 30.96 billion, while the total budget revised gross estimate for recurrent was 76. Yeah. So 30.96 as a ratio of 76, you get 48. Yeah. And we can argue that this is actually low, very low. It should be in the neighborhood of around 75. For actually, even for development within the medical services, it's 62%. Yeah. And the next department, which is public health and professional standards, still on the, yes, is the budget was 4.96, that is development, and the expenditure was 2.2, which is 45%. Yeah. Next slide. So here we highlight within the medical services, we highlight some of the services that were affected. In the first one, here we're looking at the specialized health services. For example, the oncology sessions on chemotherapy and radiotherapy. So these are medical processes for cancer patients, screening and even treating the cancer patients. So you'll find in terms of the target, they had targeted about 40,000 people or patients. But in actual sense, they had treated or served around 19,000 people, closely 20,000 people. So that's a variance of 20,000. Yeah. Okay. Even when you treat this, okay, in as much as this is annual target, this is just about 50% of that amount. So you'll expect to be in the neighborhood of around 75%. Yeah. Then, yeah, maybe we can go to the next. So the next example that we are providing an example to do with the public works as at 31st March. An example that I have highlighted is actually the pedestrian access. So when you look at for example, for development, this one applies to development. So in terms of total, we have 224. I think these are pedestrian walkways. So the 224, that is a million that was allocated, was allocated. But then in terms of the actual spending, it is 13.6 million, 13.6 million. So in terms of the absorption rate, it's only 6%. Yeah. So we know that pedestrian walkways are important in terms of reducing the risk, the pedestrian, the accidents that are caused by, I mean, in which the pedestrians are victims. So having walkways actually removes them from the main roads, and that reduces the accidents on pedestrians. So when you look at NTSA records, you'll find that actually pedestrians have the high incidence of road accident cases. So we think that while we still have high cases, you'll find the allocations is not actually matching up with the targets. Yeah, and then this we can say it affects public service delivery in that aspect. Next. Yeah. So then there is another issue to do with construction. So we have, we have inspection that needs to be done to ensure that the building being constructed adhere to the standards, the established construction standards. So we have this number of inspections that are normally done. And when you look at the target, in this case, for example, building or structures inspected and audited. So the annual target was 500. As at 31st March 2025, we had 67 inspections of these buildings or construction, the structures. So and that 500 even as not target. Period, you'll expect around 400 inspection, at least 400 inspections to have been done. Yeah, but we have a deficit of 433. Next, and failure to implement this, you'll find it may lead to structures collapsing, having injury, all that. Yeah. Another issue is to do with the pending bill. Now, when you look at the MDs, the ministers, the agencies, and the SAGAs, these are semi-autonomous government agencies. So you'll find that on average, there is a tendency, there is an upward trend. Yes. by March 25, spending of the pending bills is 511 billion. Majority of which do the semi-autonomous agencies like Kenya IS, KPA, the Kenya Post Authority, Kenya Railways, and all that. So, ministries, departments, and agencies is 90 billion. Yeah. So, as we've traced this problem from the beginning, we have a tendency to maintain the budgets, but then the revenues are not matching up. Yeah. So you will have the semi-autonomous agencies making commitments, but then the revenue, and so people who have provided services but have not been paid, then that leads into the pending bill. That's why we have ballooning pending bills. Yeah. Next. Yeah. So we've reached to the end of the main presentation. And so at this juncture, I would like just to provide some summary. So an overall projection of expenditure is actually maintained or marginally increasing, but you find revenue decreasing. And then this limits the headroom for fiscal adjustment to meet those development pressure or needs. Then the budget planning has been assuming or has been overly optimistic in terms of economic performance and hence revenue realization. But then down the line, we find we have shortfalls in economic expectations, and which leads to shortfalls in the revenue performance. Then we have seen that these shortfalls in revenue projections, while maintaining the promises according to the expenditure, lead to deficit in terms of service delivery. Yeah, and it cuts across various departments. You have seen in healthcare, we have also seen in public works under ICT, under the infrastructure and ICT sector. Then we have seen the issue of the pending bills, and these pending bills is actually public debt. And the deficit will push the government to borrow both internally and externally, which will lead to ballooning of the public debt. Then increasing, when the public debt increases, we will of course see an increase in the debt servicing charges. Yeah, which then will affect our fiscal, will negatively affect our fiscal consolidation plan. Next. Okay, sorry, we have a hand raised. I don't know, maybe we'll let me finish, then we can let, yeah. So policy recommendations, we think that National Treasury and National Assembly should be more realistic, both on the revenue, or rather use improved models to forecasting, so that in the budget making process, we're using more realistic numbers. And then they should also be more realistic in terms of the overall expenditure, yeah, to reduce the gap between the revenue and expenditure. And then we have this national tax policy. We think that the taxes should be more certain in terms of our tax, the changes in taxes, and the proposal to amend the tax should be more informed with the data and more with evidence to see how it will contribute to overall performance, rather than increasing the rate, which negatively affects the total collection because of change in the consumer behavior. And for example, we saw it in VAT. So ministries, departments and agencies, we think they should provide or prioritize spending in key areas. Key areas. So of course, across the various spending items, you can, as a department, you can prioritize which one comes first than the other, which is more critical. Yeah, and which which one can be postponed. We also think that National Treasury, the MDS, and Office of the Controller of Budget, and Office of the Auditor General should be linking or should try to link the budget allocations to performance outcomes to ensure more efficient and impactful spending. Yeah. The National Treasury should align borrowing with productive investment to maintain debt sustainability and avoid crowding out development spending. Yeah. So if you have proper projections, then development will not be disproportionately affected from the recurrent. The National Treasury and MDS should be revising the budgets responsively when economic conditions change and maintain fiscal discipline and service continuity. So what we're trying to say is, in as much as it's not bad actually, or it's not bad to amend the budget. But we're trying to say is we need to improve our models so that the budget revisions are not frequent. That's one. But when you have also when you have the revision, we should not aggravate the situation by, for example, increasing the deficit. Yeah, I think that is it from me. Back to you, Raphael.
Thanks, Noah, for taking us through the presentation. What I'm getting from Noah's presentation is that looking at the budget 2024-2025, we had our macroeconomic assumptions in that we had our own projections, and what the numbers are telling us after the controller of budget and other reports from IMF is that if you look at for example, GDP, our target, we never reaches our targets. And obviously, when you're talking about revenue, corrections, it depends in terms of how we perform in GDP, and therefore, if the performance in GDP is low, then it means that our revenue correction targets will not be able to meet our revenue targets. Number two, Noah is also telling us that when you're talking about budget revisions, and for the financial year 2024-2025, we had the revisions. Noah is telling us is that what I'm getting from Noah is that is primarily, it's not a bad thing to do budget revisions, but sometimes it shows us a sign of poor planning from the government side. And then he's telling us government should be able to do well in terms of doing our budget revision. Because why? Because even in terms of public participation, when it comes to budget revision, most likely it never happens. For example, the revision for the third revision, the revision that happened after the approval of the estimates for 2025-2026, it happens in the third quarter, and therefore there was no public participation. Number three, Noah has shared with us in terms of trends. One, expenditure side. He's telling us that when revisions are done, when you're talking about revisions, is that if you critically look, for example, financial 2024-2025, it tells that expenditure side rose by 0.5%, whereas in terms of revenue, given even in terms of there was a withdrawal of finance bill, the revenue side grew by there was a negative growth of around 8.2. And then what does it mean in terms of fiscal deficit? Fiscal deficit actually rose to around 44%, which increases debt. So, that's something, again, we need to check. And then Noah also tells us in terms of our sector performance. And he's telling us that most of our development side, in terms of absorption, we have budgeted that these are the funds that we are supposed to utilize. By the third quarter, he's telling us that, for example, energy sector, the absorption rate was around 46%, and then that raises questions in terms of how we perform. Again, he goes ahead and show us in terms of utilization out of the exchequer releases, how much are we able to spend, and also he's telling us there are issues that concerns exchequer releases, and those are things that we need to address as a country. And overall, he's telling us is that we have an issue in that most of the promises or what we said to do, what we promised to do, and in terms of our own projections, we are below the line, because at the third quarter of the report released by the control budget, we are still below the line, and therefore we need to do better as a country. And therefore, having said that, I know someone had already raised his hand. I think we go now to our plenary session, and how we go about it is that we will have the first round. The first round, I will invite anybody with a question. You can be able to use the floating bar. You raise your question, I'll be able to give you a chance. You unmute your microphone and then you ask the question. And of course, we have a chat box. I have not seen a question. If anyone has an issue, a concern, a comment, or even a question, you can be able to write it in the chat box, and then I'll be able to read and we will be able to have an answer. So far, I haven't seen a question, but I'll give a chance to Gitonga's hand is up. So I'll give Gitonga a chance to ask a question. You can unmute yourself and ask a question, Gitonga.
Thank you, moderator. My name is Charles Gitonga, and also thank you for the presentation. Very, very, very informative. So a quick comment, then my question. My comment is regarding the theme of the budget credibility. I think another reason why, or a structural reason why our budget is not credible is because of how the National Treasury is set up and controlled. If you look at Article 225 of our Constitution that provides for an act of parliament, requires parliament to establish an act of parliament, to promulgate an act of parliament to provide for the establishment, functions, and responsibilities of the National Treasury. So that legislation, of course, is the PFMA, and then now PFMA, of course, establishes the National Treasury, which is headed by a cabinet secretary, a principal secretary, who are the chief officers. So I think that's a structural issue, because the National Treasury now becomes a political office, or the leadership of the National Treasury is a political office, as opposed to how do I say, a technocratic or a corporate office, the way you think of a financial director in a company, in a big company, or a financial department, or a financial controller. And that's why I also have a problem with the way the president goes around saying nimeweka pesa, hata nimetoa pesa ya barabara. It appears that it is at his grace or his mercy, but it's ideally the National Treasury that is implementing those projects out of appropriations made by Parliament. Now, to my question, mine is specifically on pending bills. I noticed there's a clever way in public accounting where, when we are doing public debt, we only do the borrowings. The you call it the external debt and the domestic debt, but we never, in our books, I don't see that the public debt includes pending bills. I could be wrong on this, but the official reports, as well as also judgments and awards against government. And now my question here is that observation correct, that we do not account them correctly? We just talk of when we are doing recurrent when we are itemizing our recurrent spending, which also includes a debt. We don't include pending bills and the awards of court judgments, that is. Now, also my question is, now in terms of now the budget question or the budget process, why is it that if every year, of course, there's the issue of zero-based budgeting where we start from zero, but if we haven't been doing zero-based budgeting, why doesn't a pending bill from last year, is perhaps not why, is say pending bills from previous years included in this year's budget, so that if we are saying we have 400 billion in pending bills is also part of this budget, and theoretically if the budget was implemented then and fully implemented, then all pending bills up to date would be cleared. That is my question to the speaker. Thank you very much.
Thank you, Getonga, for your question. Thank you, Getonga, for your question. I will pass it on to my colleagues. I haven't seen another question or anyone raising his hand. But first, I think we can be able to address that. Noah, could you kindly be able to respond to Getonga? And then question number one, I'll request one of my colleagues, John, to respond to question number one about the credibility of the budget.
Thank you. Thank you, Raphael. So actually the in terms of credibility, he was providing the comment. According to his opinion, it's about how the National Treasury is set up. And according to him, he's saying we don't have enough independence. The National Treasury does not have adequate independence. It's being used almost as a tool by the executive, more precisely the president. So, I think, yes, and he was saying according to the constitution, we ought to have some independence. And I think I agree because we have also noticed example that we really noticed also the difference is when it comes to the allocation of revenue to the counties. So we looked at the allocation by the National Treasury vis-a-vis proposed allocation by the CRA, that is Commission on Revenue Allocation, then proposed allocation by the National Assembly, and proposed allocation by the Senate. COG. So what we see is that there is a tendency for the National Treasury to be aligned with the National Assembly. Yeah, National Assembly. So, for example, this year, for example, while the CRA had proposed 417 billion, you'll find National Treasury had proposed 405 billion to be allocated to the county. And then the Budget and Appropriation Committee just sided with what the National Treasury had proposed, and that figure differed with the Senate and the COG, where they were proposing 450. And this is not just a one-off issue. Down the line, across the many years, we have seen that variance. And so we can surely say that we think the National Treasury should be more independent in terms of making decisions when it comes to budget allocation, and not really to be siding with the executive, the president. So it should be, for example, when it comes to division of revenue, it should be a middle ground between the county governments and the national government, and not just aligning to the national government. Then I think the first question that you are asking is about how pending bills are treated. So your observation, which I think is correct, is that the pending bills, the overall debt, public debt, they don't include pending bills. Yes, and I think this is correct. Now, when you look at the document like the quarterly budget economic review, which is published by the National Treasury, you'll find they report pending bills as publicly guaranteed debts. Yeah, so they separate them. So for debt is usually termed as just a public debt, but for those pending bills, they normally term it as publicly guaranteed debt. So public guaranteed debt is as in the okay, the reason why they treat it this way is because most of these are internal. The pending bills are in domestic debt. Domestic debt. That is, for example, a company, for example, Kenya Post Authority will borrow a loan from a commercial bank, but then it is the National Treasury which will guarantee that loan. That is, in the case, in the event that KPF fails to repay that loan, the National Treasury will pay on behalf. So that is the logic, and I think that is the reason why they don't usually add to the total public debt. But in my opinion, to be honest, these public debt, the pending bills contribute to the overall debt. But maybe that's another discussion that we can have. Yeah. So we have different opinion on that. So, but then the correct position is they don't usually add, just the way you have said, to the total public debt stock. Yeah. Then the second question. Sorry, we explained. Sorry, the question, missed that question. Huh?
Yeah,
Raphael.
I can repeat it.
Yes.
Okay, Gitonga here. So the question was if is the in terms of budgeting, is the public debt, say, for the previous years included in this year's budget? Given that we are not doing I've been hearing of zero-based budgeting plus
Oh, yes.
where so the question was whether and secondly whether if, say, today the budget was fully implemented, assuming the public debt, no, the pending bills were included in this year's budget for all the years, if we implemented the budget fully, whether in 1 year it is possible to, other than by implication, then all public debt would be, no, pending bills rather, would be settled if we were included in the budget and the budget was properly implemented.
Okay, yes. Yes. So yes, you are right. In terms of when you read the budget policy statement, and even when you listen to the budget speech, you'll find that the CS mentioned that we have implemented the zero-based budget, but in reality, we have not. Yes. So whether we expect to clear the pending bills, that's, I'm not very sure, but yes, I don't know if my colleague John can help me there. So yes, we have the pending bills. They have been advisory and note from the National Treasury, or circular, yes, from the National Treasury, urging the MDS, all the departments and even the counties, to clear the pending bills fresh, so as to start on a clean slate. But that has not been the case. Yeah. I don't know how practical. Okay, maybe it should need to be done in phases. Okay, the reason why this is why I think this is the case is we have some counties with very huge pending bills running into billions. For example, Nairobi County and even some counties like Nakuru. But maybe I'll allow my colleague John maybe to elaborate more on this one. Yeah.
Yeah, thanks, Noah. This is John Mutu. Yeah, I guess first on the first part of the question that Getonga asked, in terms of how pending bills are treated. So basically, pending bills, I think, in accounting parlance, I think referred to as accounts. Is it accounts payable or something? But basically, they are treated as short-term liabilities and hence not factored together in the computation of the total stock of public debt. But ideally, I mean, because, okay, so pending bills are just basically short-term liabilities or, yeah, short-term liabilities, obviously, public debt is long-term. But the way governments do or economies do their accounting, pending bills are often not included. And you know, the account is not included in the computation of total public debt. And obviously countries follow some accounting principles and that are globally where guidelines are globally provided, so that I think they follow what is called Global Financial Statistics, GFS. So that's what guides the accounting, and basically countries do not provide that. But basically, I would say yes, you are right in the sense that for one to be able to know the total liabilities, then obviously one would need to add those pending bills. Then on the second part, yeah, so the pending bills, of course, government has, I think, issued various directives in terms of in terms of what should be done or the approach that should be taken to clear the pending bills by the national government, as well as for the counties. I think there was obviously a task force that was constituted, led by the former Auditor General. And the idea was to audit, obviously, public pending bills, because there were challenges about there were certain pending bills that were not they were ineligible, basically, in terms of whether they are the correct pending bills, or people were just presenting bills, yet they had not transacted or made any transaction with either the national government or the county government. So there was need to authenticate those bills. And based on that audit, the idea was to come up with those that are eligible and those that are ineligible. And then based on that, the idea was for each level of government, for the national government as well as the county governments, to come up with a plan of clearing those that were deemed to be eligible and already audited and confirmed to be the true bills. So I think that process is ongoing. The first proposal was obviously the directive that was issued was for county governments to treat pending bills as first charge, but that has not happened. First charge of the that's the way debt service payments are treated, but I think that hasn't happened. I think there have been other proposals in terms of how or what county governments as well as the national government should do to ensure that these pending bills are paid promptly, because obviously what has been happening is that they have affected liquidity for businesses, for the suppliers, or people who have obviously contracted, those who have been contracted to put up projects, or even to provide to supply goods and services to the government. So that's basically, of course, you can check. There have been various reports that have been produced showing the status of pending bills, but there are also other pending bills that are out of delay in payment of statutory, for instance, of pension obligations. So it's a mix of things, and some counties have done well in terms of paying those bills, but majority, I guess, are struggling. Yeah. So that's I think you can also refer to the reports by the Office of the Control of Budget to see the exact status, as well as the Auditor General's report. So yeah, so that's my comment on the pending bills. Yeah.
Yeah, thanks John and Noah for responding to Mr. Gitonga's question on the credibility of our budget, and of course the question on pending bills. I seem not to have further question, but I have a question from Eve asking whether we will be able to share the presentation. Yes, we will be able to share the presentation, and it will be uploaded immediately after this webinar in our IEA's website. So yes, we will be able to share the presentation. I don't seem to have further question, neither in the chat box. Yeah, I don't seem to have further question. My assumption is that the presentation was clear, and that everybody was able to understand all the issues that we have been able to address. Yeah, so I'll give this chance to, if there are no further questions, I'll give this chance to Noah Amarwa to make his final comments.
Yeah, thank you. Yeah, mine is to thank each and every one of us for attending. So yes, we know we participate in the budget making process, but I believe that because of these revisions that happen, they put to question the budget credibility. And hence it calls upon us to be more vigilant, to follow through the budget implementation process, to put more pressure to the government to ensure that they improve the policy and general framework to ensure that they enhance the credibility of the budget, and at least to also keep the promises that are reflected in the initial budgets that happened during the public the more or less rigorous public participation. Yeah, and we feel that some institutions need to step up more their effort. The National Treasury, for example, need to be more independent, and also the National Assembly and the Senate. So they need to support these independent institutions in terms of audit, because we have a lag, for example, in approval of audit reports. We have a lag of about 3 years now. So while the Office of the Auditor General is doing more to release these reports, but we're not seeing enough effort to ensure that the recommendations in these reports are implemented. When implemented, they'll help us to identify areas where the budget can be improved, identify those weaknesses, and at least fix them, to ensure we don't have a lot of wastages, and to ensure that the revenues are also well accounted for. Yeah, so because we have the fiscal consolidation plan, which the government on paper is telling us that it is implementing, but then these revisions clearly we see that that are affecting the budget consolidation plan. Overall budget is rising, and deficits are actually still wide. So we need to remind them, put more pressure to ensure that they remain towards that course of a fiscal consolidation plan. So with that, I'd like to wish you a good day, and we look forward to having various engagements around budget and other, even on revenue side. Yeah, back to you, Raphael.
Thank you, Noah, for your final remarks. I think what I need to say is only one thing. We have institutions which share with all of us key documents during the budget implementation phase. And one of the key documents is the reports from the controller of budget. We have shared it today up to the third quarter, and I mentioned that the main report will be out by mid-August. We should have the annual report for the financial year 2024-2025. But it's clear that if you look at the numbers, they are telling us that our oversight institution, and this is Parliament, they need to work more in terms of the committees that are in place. We have the Pick and Pack, the Public Accounts Committee and the Public Investment Committee, who are supposed to oversight over the implementation of particular development projects in this country so that we see proper service delivery. And therefore, what we are saying is that we have work to do, and this is directed to our Parliament, and we need to see some effect in terms of what needs to be done if things are not done as what has been planned. And therefore, as Noah says, we will be having more of this forum in terms of sharing out our analysis. If we analyze the OAG report or even the control budget, we'll be having more of this. And what we are telling you is that you can check on our social media platform key events in the upcoming weeks, either with other programs or the PFM program. And we appreciate for your participation and even your presence in this forum. Finally, IEA is a membership organization, and anyone who is interested with joining IEA as a member is requested to give a call to us and talk to our PR and communication. Otherwise, we appreciate your presence.